Hi, I'm Sadiq Adatia, Chief Investment Officer for BMO Global Asset Management. As we look into the year so far, we've definitely seen a few things that have changed dramatically. One, how interest rate forecasts have gone from almost 2 to 3 rate hikes to 9 to 10 rate hikes. Now, that's been driven by higher than expected inflation and longer lasting inflation as well. The third thing that we're seeing is increased volatility. Now that's probably tied to the higher inflation and of course higher interest rates. So where do things stand today and what things might look like going forward? Well, first on the inflation side, we're still at a high level of inflation and likely not to see that drop off tremendously over the next couple of months. We have seen a little bit of pullback on the energy side, so that may give future readings to look a little bit lower than expected. But our view is that energy is probably not going to stay at these lower levels and will likely push back forward given the demand supply situation that's out there. And that might mean that inflation may actually, after dropping at some point, increase again. So overall, we expect inflation to remain quite high. What that means for interest rates is pretty simple. The central banks around the world are going to continue to push on interest rates. Moving forward, rate hikes that they had planned for later down and bringing them forward. So that's why you're seeing the 75 and then potentially down the road a 50 basis point hike as well. The pressure will continue to stay on interest rates. The third part of that is it's caused markets to be more volatile. And that's because valuations need to come down. I think the important thing here is that markets have kind of priced in a bit of a higher inflation and the expectation of interest rates. But what they're not pricing quite yet is this weakening impact now of the consumer. Now, unemployment really hasn't changed dramatically, but we are seeing some softening there coming through. If that does occur, that means pressure on demand for goods, also margins decrease, and that sends the markets lower from where we are today. That is our base case scenario on what we expect going forward.